Good morning this Thursday, the 3rd of July. I'm Grady Wolfe, Senior Market Analyst with Bell Direct. Wall Street closed mostly higher on Wednesday after President Trump announced a U.S Vietnam trade deal has been reached to the effect of 20% tariffs on goods imported from Vietnam to the U.S. Investors welcomed the news despite fresh economic data out yesterday showing private payrolls in the U.S. surprisingly declined in June. The S&P 500 ended the day up almost 0.5% to a fresh record high of 6,227.42 points, while the Dow Jones fell just 0.02% and the tech-heavy Nasdaq ended the day up 0.94%, also at a fresh record high. In Europe on Wednesday, markets in the region closed mostly higher despite volatility in the UK. The STOXX 600 rose 0.2%, Germany's DAX added 0.5%, the French CAC climbed 1%, and in the UK, the FTSE 100 ended the day down 0.1%. Across the Asia region on Wednesday, markets closed mixed as investors assessed US Fed Chair Jerome Powell's latest comments around further rate cuts would have already having happened if it weren't for President Trump's tariff initiatives. China's CSI index closed flat on Wednesday. Hong Kong's Hang Seng rose 0.73%. Japan's Nikkei slipped 0.5%, and South Korea's Kospi index ended the day down almost 0.5%. The local market reset its record yesterday, with the key index ending the day up 0.66%, with 10 of the 11 sectors ending the day higher, led by materials stocks rallying 1.83%. Retail sales data out yesterday locally for May came in at a rise of 0.2% month on month, which fell short of the 0.4% rise markets were expecting, signalling consumer discretionary spend remains subdued due to higher cost of living pressures and overall uncertainty. Much to the listed retailer relief though, retail spend in May was boosted by a bounce back in clothing purchases, albeit at a time when a larger number of these retailers held higher promotional activity to reduce inventory levels. Other than clothing spend rebounding, retail sales and spending was otherwise restrained last month, with a drop in food-related spending and flat results across household goods. Qantas shares tumbled 2.2% yesterday after the flying kangaroo confirmed it has been hit by a cyber attack, affecting the personal data of more than 6 million customers. Lenders mortgage insurance provider Helia Group sank over 20% yesterday on news that another major long-term partner in ING Bank was negotiating a deal with alternative providers. The move comes just months after CBA pulled the pin on its LMI deal with Helia. Domino's Pizza shares also fell almost 16% after the company's CEO, Mark Van Dyke, announced he will step down from the role after just 12 months at the helm. On the commodities front this morning, oil was trading 3.2% higher at $67.54 a barrel. Gold is up 0.57% at $3,357 an ounce, and iron ore is up 1.84% at $95.13 a tonne. The Australian dollar has strengthened against the greenback overnight to buy 65.86 US cents, 94.59 Japanese yen, 48.28 British pence, and 1 New Zealand dollar and 8 cents. Ahead of Thursday's trading session here in Australia, the SPI futures are anticipating the ASX will open the day down 0.21%, despite the records set on Wall Street overnight. And now let's dive into a trading idea for your consideration today. Bell Potter has decreased the 12-month price target on Santana Minerals from $1.30 to $1.18 and maintained a speculative buy rating on the gold miner following the release of the company's updated pre-feasibility study for its 100% owned Bendigo Offer Gold project in New Zealand. It is well placed to complete its fast-track application, commence early site works in the second half of CY25, make a final investment decision in early CY26, and commence its construction in the first half of CY26. It remains one of the nearest term new gold development projects on the ASX, and this is why the analyst has maintained a spec buy rating on the company. And that's all for this morning. Have a wonderful day and happy investing.